August Biniaz with Real Estate Investing Demystified. We're at Vertical Street Ventures Conference here in beautiful Scottsdale. Classy event, classy attendees, and the classy Ray Hightower.
Hightower.
So Ray, tell us what brings you to the event.
I love working with VSV. I did my very first LP deal with VSV and my very first GP deal with VSV, and I'm also a student in the VSV Academy. I enjoy partnering with them and interacting with them. I always learn.
Tremendous. And now you talk about being an LP, talk about being a GP.
Yes.
Seems to be a kind of a evolutionary kind of path. Is that what you suggest to a lot of people looking to get into commercial real estate, particularly multifamily? Should they start out as LPs? Should they have these goals to be a GP? Is it a good asset class? Is it good investment thesis to just be an LP? Give us kind of your understanding.
Oh, there are many questions in there, right? And in fact, someone asked me that very question on the bus. You know, should I start off as an LP first and then become a GP? There's so many paths, so many ways to invest in real estate. If you want to ultimately become a GP, I think it makes sense to become an LP first. Or if you're a very busy professional, say you're very successful in whatever field you're in, maybe you're an engineer or you're a physician or you're an architect and you're making a lot of money in that profession, maybe you don't have time to become a GP, so you can just be an LP. If you're in a profession that throws off a lot of cash and you want to put it in a position where you get capital preservation, tax advantages, and return on investment, I think it's great to be an LP. And it's certainly a great path to becoming a GP as well.
Tremendous.
So it varies depending on the person, and it varies depending on the goals that a person has.
Great answer.
Yes.
Now let's talk about on the GP side. You talk about GPing with Vertical Street.
Yes.
That's I'm assuming is co-GP, obviously.
Yes,
right?
obviously.
You're a GP entity. They're a GP entity because a lot of passive investors, they understand that within a limited partnership, within this real estate private equity concept, there's investors that are limited partners or passive, and then there are general partners.
Yes.
So within that general partnership entity, there could be also multiple general partners.
There can be.
There can be. So in your case, you're a co-GP.
Yes.
Talk to us about what are the skills and what is the value that a general partner brings to the other team, like when they're out there looking for another person to partner with. Talk to us about the synergistic alignments that exist between two GPs. Why would they come together?
Yes. You know, it's so cool that you mentioned synergistic alignment, because it's all about synergistic alignment. How do the partners come together and complement each other? There are three main areas where GPs can work. That is capital raising, acquisitions, and asset management. And sometimes you find a person who's very gifted in one of those and maybe does a little bit of the other two. And, people are different ways. Some people are very outgoing and they're always raising capital. Some people are very good at asset management. Your project managers from corporate America tend to be very good there. Or people in acquisition, sometimes they're very good with underwriting, or good at building relationships with brokers and selling and sellers. So those are the people who are good with the acquisition side. So I think it depends. Each person should look within themselves, figure out what their gifts are, and perhaps get feedback from the other general partners on the team or other people that they've worked with, and figure out where they're a good fit. Or try all three of them, and over time you'll tend to gravitate towards one. I find with most people.
Similar thing happened within our company when we started CPI Capital. Initially we had certain plans, but as the leadership team came together, we just fit in our own spots. It happened very organically. So I totally understand. Now talk to us about conferences. Obviously you're a thought leader. I see you on LinkedIn. I see you on social media. You're very active. We've had some great conversations in the past.
Yes.
Talk to us about the benefits of these in-person conferences where you're intimate, if it's connecting with potential investors, if it's connecting with GPs, if it's listening to expert guest speakers. Talk to us about that value add you've received from being at such conferences.
There are many.
Or maybe you say, don't do it.
Or maybe I say, don't do it at all. Right? Got to have that as an option. That's a realistic option. For me, there's definitely value in the speakers, the people who are on stage, who are sharing their expertise, people who are on stage and sharing what they know with the people in the audience. And then there's value from the questions and answers. There's even more value, I would argue, in what I like to call the hallway track. And other people call it the hallway track. And that's you and me having a conversation. August, you and I having a conversation. Ava, we're having a conversation. People talking one-on-one with each other about their experiences. Oh, wow, I had a great experience with this lender or a bad experience with this lender, or I had a great experience with this property manager or a bad experience, and learning firsthand what's going on.
Who's in trouble,
people.
who's underwater, what's happening, all this great stuff.
And
our own version of gossip also takes place.
It is gossip, it's the rumor mill, it's all of that. It's the first draft of history, the first rough draft of history, as they called a newspaper, right? So all of those happen at a conference, and you get those in a much more powerful way in person when we're just talking to each other like this. It's much more powerful than it is when we're all on Zoom.
Yes.
Zoom is okay, and we had to use that during the pandemic, but when we're talking to each other one-on-one, we get a lot more out of it.
So the ROI is worth it then?
ROI is huge, yes.
Awesome.
Especially for BSB Con. This is my second year at BSB Con. I get a lot out of it. I have massive respect for the partners who run Vertical Street
They're great
Ventures.
guys. I've only known them through social media, not meeting in person, and the energy they have on stage.
Yes.
And just the type of attendees that are here, I'm liking them minute by minute even more.
Absolutely. Yeah, there we go.
Awesome. Now, last point, let's put you under the gun a bit here.
Yes.
Let's talk about some predictions.
Okay.
We're still in an increasing interest rate environment.
Yes.
And when you talk about real estate and when the rates are being increased, those are scary times.
Yes.
Right?
Oh, yeah.
So, what is your thesis about as far as investing? Is it advice to sit on the sideline? Should like newer syndicators or even any type of investors, is it a good time to enter the market? Where you see things going there as far as product or supply being in the market?
Yeah,
deals? You still deal, obviously there's a lot of less deals happening, but talk to us about as far as the interest rates and as far as the choppiness of the environment. Is it a right time to enter the market right now? And if so, are there any risk mitigating things that people need to do?
Yes. Okay. Well, as you know, real estate is a very local business. So is it the right time to enter the market? You got to define the market. Which market? There's some markets where even if interest rates dropped, 200 basis points, it still wouldn't be the right time to enter because of other factors in that market, right? So is it the right time to enter the market? I think it depends on whether you've done your research. Have you done your underwriting? Have you looked at the rent comps? What's happening with rents in the area? Are they going up or are they flat? Is there an opportunity if you're looking at a property, is it below, are the rents in that property below market relative to the other properties in that market? If you improve that property, will you attract the tenants that you want to be at that property so that you can raise the rents, giving your residents the value that they want while still delivering value to our pockets and to the pockets of our investors? So there are many, many variables to consider.
Localized and project specific, asset specific. So basically your response is a very lawyer type response, which is depends.
No, don't call me a lawyer. I used to like you. You just call me a lawyer. I'm just kidding. That's all right. No, it depends, but this is a case, I can understand why that sounds a little bit slippery, but in fact, it does depend. For example, is this a good time to go outside? Is this a good time to go outside? Well, it depends on what the weather is. Is it raining or not? Well, it may be raining in Chicago and not raining in Phoenix. It depends. The weather is localized. Just as the weather is localized, that's the way real estate markets are localized. So that's probably a better answer for you. So enough. Thanks for holding me accountable on that. I appreciate you for that.
Well, let's talk about markets, regions. Are you bullish on any particular market? Where are you investing? What are you looking at?
Yes.
Talk to us about that.
My partners and I are investing in Phoenix, Tucson, and the cities south of Tucson, Sierra Vista, Green Valley, Dallas, and those parts of Arizona. We really like Arizona. We like Arizona for 3 reasons: job growth, income growth, population growth. Job growth, oh my goodness, you've got TSMC building a huge factory here. They were originally putting $12 billion into that factory. They've upped their budget to $40 billion. And you have Intel growing their factory. You have all the tech giants. You have your Googles, your Apples, your Facebooks, all of the Amazon. If you throw a rock in Arizona, you're going to hit an Amazon warehouse. So you have all of this growth here. Job growth, income growth. These are high-paying jobs coming in here. So high-paying jobs means that people are in a better position to pay higher rents. If they can pay higher rents, we can improve the properties for them and give them a better place to live. And then population growth. People are moving here from California. There are things they don't like about California that they do like in Arizona, so they're moving here. And those same 3 things I see in Tennessee, particularly in Nashville. People are leaving, New York and other states, north of Tennessee to move into Nashville because of, job opportunities, income increase, increases in income, and as a result, you get a population growth there. So really, we're looking in places, in markets where you say job growth, income growth, population growth, and that in turn generates opportunities for a real powerful return on investment.
Amazing, Ray. Really appreciate it. Let
Thank
people
you
know
for having
how
me.
they can connect with you.
My name is Ray Hightower. You can find me at rayhightower.com.
Awesome. There you go.
Thank
Easy
you.
enough.
Thank you so much. Thanks for having me. This is good. I love your questions.